I am not going to talk about desktop to mobile, but I hope to tell you about great storytelling, actually, just to pick up on a theme that Julie mentioned earlier on. I've been very fortunate to work with a whole bunch of different privately owned companies over the last 16 years, which has seen me work with very small startup companies, as well as with much larger companies, and some great names within the creative services and digital media sector, including The Mill, which actually I just saw recently got acquired again by Technicolor, a high-end special effects company. I sat on the board of that business for 5 years, having bought it when I was at the Carlyle Group. And more recently with BGF, working with small, independent and ambitious companies. I'm on the board at the moment of Exchange Lab and 4 Communications. Exchange Lab is a programmatic buying platform, and 4Coms is a little PR business going through a buy and build growth strategy at the moment. So Julie asked me to come along and share some perspectives as an investor in the media and creative services space, which I am delighted to do for you this afternoon. And really the theme I'm going to come back to as we go through the deck is around risk and return, which I think is the language that investors speak in, and if as independent companies looking to stay independent and to raise money to build a much bigger story rather than looking to exit in the short term, speaking in the language of risk and return, I think is the way to stand out from the crowd and raise money successfully from institutional investors. My agenda is really built around those themes and those bullets. Please forgive me for perhaps referring to BGF and what we do every now and again to give some BGF perspective on what we're currently seeing. So growth, what is driven, what drives demand for growth? And as a provider of growth capital and looking at the companies that we work with in the sector, these kind of 3 or 4 growth drivers are very common themes. So making acquisitions, going international, strengthening the balance sheet more generally, or even just local expansion. These are all trends and themes that drive a capital demand from a company that cannot necessarily be met by the operating cash flows within the business. And that then leads the company to look for an external funding partner so that it can invest in these initiatives and drive the longer term growth story. The other 2 kind of themes that I think they're a bit more generic but come through in what we do are management ambition, and building trust with management teams. It's all very well there being an opportunity, but from my perspective of an investor, a lot of what I do is building relationships with management teams, understanding their ambition, their track record of delivery, and that all goes into the mix of assessing risk and return. The final one is around shareholder alignment. So often we meet situations with a great opportunity to grow in a great team, but growth itself can be frustrated or hampered by a misaligned shareholder base. And in some circumstances, we are able to provide capital to help realign a shareholder base and get the new shareholder base all rowing in the same direction going forward. So I think there are 3 zones of interest that we look at as investors. What does the company need in terms of capital? How ambitious is the team, and is the shareholder base aligned to all go in the same direction? And I think those 3 things need to be in place for a good and successful growth capital raise. So these are the demand drivers, if you like. The other point I would mention, and what we do at BGF, is not only provide the capital, but we also work with the exec teams we back to build boards, and particularly, and I'll give some examples later, but particularly work with the exec teams to find some really exciting chairmen to oversee the growth going forward. So our story really as an investor is about not just the capital, but also the support we can bring. If I look at those same, just a brief but relevant aside, and I think an important aside, when institutional investors look at that same list of issues and where the entrepreneur sees opportunity, of course, investors see risk. And I think when communicating with an investor, it's really important to understand where they're coming from, but also to position these opportunities in terms of return when communicating the overall story. And that does come back, I think, to being able to be a good storyteller and using those 2 parameters of risk and return to tell your story in. On this slide, I just wanted to show a brief snapshot of two things, I think: the corporate funding cycle and the broader private equity community, and where BGF happens to fit within it. Horizontal axis is time, and the vertical axis is either revenue or profit. So at the bottom left, we have early stage small companies who are actively served by a community of venture capitalists, high net worths, and angel investors. Top right, we have much more mature, cash flow positive companies serviced either by the public markets, but also by a very vibrant private equity community, which is really focused on buyout deals where there is a buyer and seller of a company, and the company itself doesn't really get to see the capital that changes hands between the buyer and the seller. And actually, when you look at the private equity world, it's become polarized, I think, at those two opposite ends of the spectrum, with the bulk of capital going in at the top right at buyout world, where you can make some fantastic risk-adjusted returns. Again, I wanted to touch on BGF once or twice as I go through my slides. BGF sits in the middle, and our proposition is really for smaller businesses. Turning over 10 to 100 million pounds is a sweet spot for us, and providing between 2 and 10 million pound chunks of capital to those companies to fund some of the demand drivers that I talked about on slide 1. And it's really for those companies who are looking to stay independent and build their own story over the longer term. Again, I'm going to come back to risk and return. When investors look at that panacea and they look at companies, they'll see risk reducing as you go from left to right. As a fundraising company, of course, it's not just about going to private equity and raising. Equity is expensive, right? So as you mature, or as a company matures, its ability to raise debt increases. So one of the skills and the arts of raising growth capital is to blend an optimum combination of debt and equity, because debt is obviously very much cheaper than equity, but it comes with more constraints, things like covenants and security, so on and so forth. So the art really of raising growth capital is to blend the two instruments to get the minimum cost for the maximum flexibility. And we do that constantly with the companies in our portfolio, pulling together debt and equity packages on the journey to help them grow most effectively. I would also say there's loads of capital out there, and particularly in the bit in the middle. I mean, we're very fortunate with a £2.5 billion commitment to do what we do. There are lots of other equity funds, some of the VCTs, as well as debt funds. A huge proliferation of debt offerings are now appearing in that space. So I think for good stories and ambitious teams, the good news is there's plenty of capital available, and then it comes back to telling the great story, cutting through the noise and talking in the language of risk and return. What do we look for when assessing an investment opportunity? And again, without wanting to read through a bunch of motherhood and apple pie bullet points, these are some of the things that we will look for when assessing an investment proposition. Telling or talking to those points in the language of risk and return is what helps companies stand out from the noise. And really, I would bracket the three headings as building trust, articulating the story with clarity, and then talking about the value play. So when we start to get to know a company and what it's about, understanding what's the market environment, what's the strategic story, where are we heading, it always amazes me how difficult some companies find it to articulate why do customers buy from you? What's your USP? And so being able to kind of talk within that context of a strategic vision in a structured way, it goes to the clarity point, and I think that would be my first takeaway here. Trust. We happen to only ever take a minority position in the companies that we back, which means there's a huge amount of alignment and trust between us and the teams that we look to back, and indeed that obviously works both ways. But understanding a team goes to things like current trading. You know, what budget did you set at the beginning of the year? How are you trading against it? Are you hitting your numbers? That's a really big data point for us. As well as the final point here, you know, being honest about where the gaps in the story lie. Because a good investor, worth its salt, of course, should be round the table together with the team they've backed to understand where the gaps are and help to fill them. So I think, you know, clarity, trust. The final point there is value. You know, shareholder value is a very simple formula. It's EBITDA times a multiple plus cash minus debt. And as you're telling your story, just understanding where are the levers in the business that go to each of those points helps bring it to life for a simple investor who thinks really at the bottom line through that equation. So having said all that, again, just to recap on BGF, we're now just over 4 years old. We launched in May 11. We're very fortunate with a commitment of £2.5 billion from our 5 shareholding banks. We launched with a growth capital proposition squarely targeted at SMEs. As I mentioned, you know, 5 to 10 million pounds worth of turnover at the lower end, all the way up to 150 million at the top end. As we've grown, we've expanded that proposition. We're now supporting companies quoted on AIM. We've funded a number of multi-generational family-owned businesses. And we have recently hired a team to launch a Series A pre-profit proposition to the earlier stage community. And so we as a business have grown very quickly in its exciting times. To give you a feel for that, we've invested in just over 100 companies altogether and deployed just under £600 million in those 4 years. And about 50% of that £600 million was deployed in the last 15 to 18 months. So the rate of momentum and growth of deployment at BGF is in and of itself very exciting. Our proposition is a cheque of between £2 and £10 million. There are 2 key points of difference really in terms of the flavour of BGF's money. We only ever take a minority position and we have no predefined timeline on exit, which I think makes us a slightly different proposition to mainstream private equity. So we're long-term patient capital and we're all about backing teams, aligning with them and supporting them through the long term to exit. I talked earlier on about board level support, and I've got a couple of slides with case studies. So we work with our exec teams to find really exciting chairmen to oversee the growth stories and sit on the boards. We're also really, you know, building a not insubstantial club of companies now, and we run annual events for our chairman, our CEOs, our finance directors, and there's some great cross-sector networking and knowledge sharing available via those channels as well. Our average cheque size, just some very brief stats, is just over £5 million. We've supported 36 acquisitions, although that number is slightly out of date, as is 52 chairmen appointed, but appointing a chairman is a key part of our value add and our model. And here are some of the companies in the creative services and ad industry that we've supported. Unruly, Julie mentioned earlier on, which has recently exited. The Exchange Lab, a DSP platform, I'm on the board of that business. Zone, Palmer Hargreaves, 4 Communications is a deal we completed in the summer, which is one of my case studies. But you know, our portfolio now represents just over 10,000 employees with combined revenues of just under £1.4 billion. As I say, which in and of itself is an exciting growth story for me as a member of the team at BGF. Very briefly on a couple of case studies. So with the Exchange Lab is a platform that sits across multiple DSPs, offering the users high levels of inventory and you know, the goal here, or the proposition therefore, is to minimize cost of customer acquisition. We met with that business, wanted to internationalize, wanted to invest in the platform. We had a very ambitious team. Looking to do some partial de-risking, that goes to my shareholder alignment point, but also bring in a long-term financial partner to invest in growth. We provided a £5 million cheque and worked with the exec team to appoint Chris Dobson former BBC Worldwide and Microsoft, to chair the board. And he's brought a huge amount of strategy discipline, directed investment in the platform that's really allowing that business to scale right now. And critically, one of the challenges we've seen across our portfolio is growing into North America. And we've got, having had a couple of less successful attempts, we've now got some good momentum behind that. Very briefly on 4Comms, because I think I'm coming up for time. This is a small PR business that we backed over the summer. And in actually 2 short months, we've made 3 acquisitions. We actually provided funding alongside a bank, going to my point earlier about blending debt and equity appropriately. So we've made 3 acquisitions, as well as raising the debt, and we are about to announce an exciting board appointment with a major agency group, M&A board director, joining the board to chair at 4Comms. I don't think I need to go through all those points, but I should pause there. If I have time for questions, I'd love to answer questions. But if not, we could catch up over drinks and networking later. Thank you.